Hello and welcome to Safety in the Market and our new series where we show you a trade that we have been working with our students during the month. I'm Darren. I'll be talking you through this recording. We're going to look at Apple today, and we've got three short trades to show you on Apple and how our students have been going about their business. This was our setup. That top there is Boxing Day, the 26th of December 2024. Like I said, we're working with a daily bar chart on Apple from the NASDAQ in the USA. Now, we had a previous low down here at 219.71. From some analysis and research, we know of some possible support around 218. So that support there and this previous low will just keep us in check when we try to take some trades here. Now, we had at least 4 or 5 reasons for this top to come in. So some of our students, as we head into profit source, some of our students here will be aggressively trading this top because they've done their research and they've got enough information to suggest that we may be getting a top around this level. So if we break the low of this bar, i.e. on that day, some of our students will be getting short at that point. The point that that bar is broken down and we go below, half our students would be in at that point, if not already using intraday techniques that we talk about in our coaching. So we'll just watch and see how they go, because not everyone would be getting in on that morning. Obviously, it's Christmas time, holiday period. Some people are busy. But if you did get in, you can see that your trade had been going very well indeed. And then we have an up day, inside day, and then an up day there. And we've done very well by getting in early as the market falls away. So we were correct about that top with all our analysis. Now, this bar here would give our students an opportunity to get short the next day. Okay, so some people are a little bit more conservative and they will wait for this next opportunity rather than jumping in near the top. Some people are already in and will be looking to get in again. Okay, so we're all different and we all trade differently, even if we all use the same work that David Bowden has shown us in his course. Okay, so some people will be waiting for the next day. They put their trades in the evening here and waiting for this bar to be broken so that they can get short. And there you go. So that's part 2 or trade 2 of our sequence here. Some people will be in both, and some people would just have entered at this point. So we watch the market, it falls away, okay? And obviously now you're thinking, right, where does this trade end? Where does this move end? Maybe our student got in here, maybe they got in here. I'd say the aggressive students, we spoke about possibly using this low as a target. So we might end up with a double bottom. If we do, generally it'll take out this previous low. It might carry on. Either way, they'll be happy getting out along that pink line if we get there. And we've also got this 218 target from a previous range in the market to watch out for. So our students will be looking to get out before that point, whichever trade they take, 1, 2, or 3. But we're into 1 and 2 currently, so we'll just carry on following the market. Now, here's another potential entry day. It doesn't happen by the looks of things, okay? But this next day is also a potential entry for our students here. So if we break the low of this bar, we are into a trade, maybe the third trade for some, maybe the first or second for others. And in we go. So all 3 trades are live now. People entered here, people entered here, and people entered here. Okay? Some people 3 times. And we carry on and we watch. And bang! The market drops down. And as you can see, touches our previous low line doesn't get down to 218. And most of our students would have had profit targets just above here using ratios from these ranges on the way down. Either way, they would have made sure that their targets were met either at this pink line, and I can tell you now there was some profit target taken at 220 and 221. Just above this pink line. And some people would have gone all the way to the pink line, but hopefully most people would have been out before this blue line down here. And obviously the market could keep going down, but you need, if you've done really well out of these trades, there needs to be an exit point at some stage. And here we see the market bouncing away from that point and up it goes. Okay, so we were right to be concerned about this low. We were right to be thinking about this possible support, and we've managed to get 3 trades in and out of the market, so to speak. So we will just head back inside and just have a look at some of the results that followed. So our risk on trade 1, when we entered that market right at the top there, our risk in points, so that'd be $2.49, but in points, 249. Our reward to get down to that pink line, 3,791. That's a reward to risk ratio of 15 to 1, just over 15 to 1. If you had an account of $5,000 and you were only going to risk 5%, you would be risking $250 for that first trade. If you times that risk by your reward to risk ratio, 15.22 to 1, your profit from that first trade would be 3,805 Australian dollars. Okay, so that was trade 1. Let's have a look at trade 2. Again, our risk in points, 415. The reward would be less because we got in later, further down the move, but 2,300, which is a risk to reward of 5.58 to 1. Again, there's our account. We haven't added to it at all. And we got our 5%. And if we times that risk, that $250 by 5.58, we come out with a profit of 1,395 for that trade. Not bad at all. And then trade 3, obviously even further down towards our profit target. Risk is very, very similar. Reward is only 1,307 points. That's a 2.87 to 1 reward to risk ratio. There's our risk, $250. And you times that by the 2.87 and you get a profit of $717.50. Okay, but obviously if you add the 3 rewards up for the students who were in from the top and traded all 3 trades, they'd be walking away with over $5,000 there for that under 4 week rundown on Apple. So that's how we operated this month in January. At Safety in the Market, we try to stay ahead of the game, and we coach and trade alongside our students, and it's a team effort, and nobody is trading out there alone. We're looking after them all the time. So we'll see you next month for our February trade. Thank you.